My name is Hamza Azhar Salam, and you're watching the Pakistan Daily. Today, we're going to speak to Professor Brian Brivati, a world-renowned historian and the author of The Life and Death of Abraaj Group. Abraaj, as we know, was the world's biggest private equity firm dealing in emerging markets with around $14 billion of assets under management, and it was led by Pakistani national Arif Naqvi. And Professor Brivati has written a very interesting book on Abraaj. And he's mentioned that if Arif Naqvi had been white, he might not have been under house arrest right now. So, Professor Brivati, what role do you think Arif Naqvi's nationality and race played in Abraaj's downfall?
I think what we've seen over many different cases is the way in which UK, US-based companies get away with fines and civil actions against them when they are accused of this kind of regulatory issue. What we've seen in this case is something completely different. And why that happened is, I believe, in part because of Arif Naqvi's identity and Abraaj's identity. So Mr. Naqvi, a Pakistani national, was running his Abraaj private equity company based in Dubai, registered in the Cayman Islands. He was a technician for making money for Arab investors in that company. And he passed as an Arab in Dubai. The company was based in Dubai, but it wasn't of Dubai. Similarly, he was on Wall Street and he was on the London Stock Exchange and other less well-known stock exchanges around the world doing deals. And in all of these places, he passed as a private equity guy. But actually, the private equity world is a very white world. I'm not saying there are no people of color in senior positions in private equity companies, but those companies are UK companies, they're US companies. They're not Arab companies based in Dubai, run by a Pakistani. And finally, he was on the world stage. He was on Davos at the World Economic Forum, and he was talking with passion and commitment, the talk of impact investment and making a difference. Things that he profoundly, in my view, believed in. This is not a fairy tale. Impact investment works on the ground in creating jobs, in providing health and education in difficult markets, complicated places. Now, as soon as this went wrong, as soon as the media coverage began to destroy the reputation of the company, suddenly he was a Pakistani in Dubai. He was a Pakistani in New York and London. He was a Pakistani on the world stage of Davos. And all his supposed friends and partners melted away. Now, would they have melted away if he had been a part of the Western establishment, if he had been a white guy in Goldman Sachs? I don't believe they would have melted away in the same way. And I don't believe the actions that took place against him would have done. But it's not only identity, as I'm sure we'll come on to talk about, it's also about geopolitics.
Very interesting. But there's been an issue about the valuations of some of Abraaj's investments. And do you think Arif Naqvi was honest to his investors about the financial health of his investments, like the Turkish Yorsan Group or the Saudi restaurant chain Kudu?
So I think we need to think about the way these kinds of companies are structured. So there was a holding company, Abraaj Holdings Limited, which had one set of investors and one set of creditors, none of whom were from the United States. And then there were each of the different funds which invested in the different geographies or thematic areas, the Turkish fund, the health fund, the clean energy fund, and so on. So if there were problem companies, then they were dealt with at fund level, and there were certainly some issues. Over the lifetime of the company, Abraaj invested in about 200 different companies. And there were problem companies at fund level within all of those investments. You invest with private equity, it's over a 10-year period generally, and the company will invest in one of what are called portfolio companies, and there may be bad years, there may be bad times in which things are not going as well as they should. Over the lifetime of the firm and over the lifetime of the investment, actually the performance was generally pretty good. The second thing to think about is this issue in detail of valuation. And Abraaj actually followed global standards in its valuation process, and it involved a large number of external experts in developing its methodology for valuing companies. There was a huge process of due diligence before they invested in a company. Also, every single investor in Abraaj will have done a huge process of due diligence before it decided to invest in those individual funds. And if I'm an investor and I've got $100 to invest, I might put $5 or $10 into the private equity bit as a non-standard asset class, as a higher risk part of my portfolio, because I understand that sometimes these things will fail, but sometimes they will also be spectacularly successful. And Abraaj's particular talent was at deal level, at company level, of making a difference to the way in which companies operated and the way in which they ran in these emerging markets. And these companies were sometimes run differently than companies in other geographies. And so Abraaj compensated for that in the way they approached the due diligence process. Mm-hmm. In 2016, Mr. Naqvi was trying to take his company to the next level. And Hamilton Lane, an investor with Abraaj, looked at the way they valued companies and suggested that they change to a different standard of the way in which those valuations took place, so that if they believed that when they exited, a company would be worth a certain amount, then why put the value up and down on the road to that exit? Have faith in that and present that in your quarterly reports and your annual reports to your investors. So the bottom line in all this, I think, is that there's nothing unusual in a portfolio of companies that are invested in by private equity firms for there to be some problem companies or some companies that over a period of time are going through a problematic period. It's very normal for the sector.
But we've also seen some leaked emails between Mr. Naqvi and his teammates, and those emails have also been published by some news outlets. And they talk about the valuation of those companies, or valuing them at a certain amount so that they can get credit from other sources. So do you think such practices, do they imply any financial criminality at all? Or like you said, it's just a common practice, like you just said?
Well, I think what we've got to see here is that there's a difference between a hedge fund and the way a hedge fund is rewarded and a private equity company. So a lot has been made of this valuation question, but if you're in a hedge fund, what you want is you are paid, you make your money at the high watermark of value of your investments over a given year. So in a way, it's in your interests to push those valuations up because that's how you get paid, right? If you're in private equity, most people in the private equity teams only get paid when the investment is exited. So in a way, all of this talk of valuation is a bit of a red herring. What matters is at the moment of sale, cash in, you've put cash into the company, how much do you take out? There's an exception, and that is the people in the team who are raising money for a fund. And in this case, the APF 6 fund, which was the global fund. And they're trying to attract investors. So they may well want to have a more positive kind of valuation methodology, but everything, all the underlying data is given to the investors. So it doesn't really matter in a way what spin you might think somebody in this field has put on it. You hand over your report with all its footnotes and all the raw data. Then me as an investor, I'm a sophisticated investor, presumably. I've got hundreds of millions of dollars to invest. I then look at the underlying numbers, right? And if I believe in those numbers and that raw data, I invest. And if I don't invest, right? So I don't believe that there is any case to answer in terms of misrepresentation or misvaluation. And I think the emails that have been released there's some colorful language, there are some colorful exchanges between people as there would be if any of our email or conversation exchanges, you and I, Hamza, were released. We wouldn't want every single conversation we ever had to be put out into the public domain for scrutiny like this. You've got to look at the underlying facts, the hard data. If I'm a sophisticated investor from anywhere in the world, I look at the raw data. If I buy the case the private equity company is making, I put my slice of investment into it. If I don't buy that case, I don't.
Yes, fair enough, fair enough. So, Professor, let's talk about K Electric. And many people claim that if K Electric's sale had gone through by Abraaj, then they might not have been in so much trouble. But why do you think the sale didn't go through? And do you think there were some bigger players or bigger forces at play?
So I think K Electric is the key in many ways that unlocks this story. When Abraaj made their original investment in 2008, WikiLeaks documents show the US Embassy welcoming that involvement, welcoming Abraaj's investment, because they saw it as a way of enhancing the energy sector in Pakistan, which would improve the security, the political stability. As you know better than I do, Karachi Electric is crucially important in the politics of that city. That city is the engine of the Pakistani economy. So whoever runs Karachi Electric has a big influence on the economy, has a big influence on the politics of Pakistan. So America wanted a Western-oriented, Western-friendly company in there, and they thought that's what they were getting with Mr. Naqvi's Abraaj. But actually, what they were really getting in Naqvi was a Pakistani patriot, right? In the end, he was going to do the things in his business dealings that were in the best interests of Pakistan when they involved Pakistan. And in this instance, he believed, as a Pakistani patriot, that selling Karachi Electric to Shanghai Electric was the best deal for Pakistan, because Shanghai Electric was offering $9 billion of investment. Between 2008 and 2016, Karachi Electric made some progress, reduced outages, became more efficient. Shanghai Electric promised to continue that process. But the deal was done in October 2016. If the Americans welcomed that sale to Abraaj in 2008, they were dismayed by the announcement of the sale to Shanghai Electric in October. And in November, Donald Trump is elected president. Record donations to Donald Trump from the US private equity industry at the same time. And the US private equity industry and others were quite jealous of Abraaj's network in emerging markets. There's one estimate that it would cost them $500 million to get that kind of a network. So there were economic interests at play. There were political interests at play. Donald Trump had said all the way through his campaign that he was going to fight a trade war with China. Arif Naqvi was on the record as supporting Chinese investment in Pakistan. In his new global fund, which he was trying to raise money for, there was a significant amount of Chinese investment, which would open more emerging markets to more Chinese investment. And he'd even, in one report, says he'd considered selling a chunk of Abraaj to the Chinese. So he was supporting Chinese and Pakistani economic partnership. And my argument is that there's no way the Americans wanted that sale to take place, and they let it be known to their friends within the Pakistani establishment who are friendly to the United States. There's a good relationship over many decades between Pakistan and America, a complicated one, but a good one. And Pakistan is in a way caught between these two superpowers, China and the US. Those elements within Pakistan who support the US dimension helped block the deal. And it still hasn't taken place, right? That meant that there was a cash flow crisis within Abraaj because 550 million of the 1.7 billion sale of Karachi Electric would have flowed in to that holding company that I mentioned, AHL. And that caused vulnerability. But, and this is what I think is fascinating to me and crucially important, but even though the company was vulnerable, it took a series of what I've described as precision strikes to destroy it. And I just don't believe that this happened by accident. So yes, there were bigger things at play here, as you suggest.
Very interesting. And you mentioned precision strikes, and I'd like to correlate this with some of the media coverage on Mr. Arif Naqvi and the Abraaj group in general. We've seen Mr. Naqvi being painted in a very negative light across the Western press, and we've also seen some news outlets, publishing their stories at a time where it was very sensitive for that information to come out. And now we see Mr. Naqvi is facing extradition to the United States. He faces 300 years in prison in the United States. So why do you think the US is so eager to get him extradited? And why did the US-led media play such a negative role in Mr. Arif Naqvi's coverage?
Well, as I've said, I think the vulnerability is created by the blocking of the sale of Karachi Electric. And then that creates a cash flow problem in the company. But the only investors who raise any questions about the way the company is being run are a small number of investors in one fund, the health fund. And they question whether what's called the limited partner agreements, which manage the relationship between the investor and the private equity company, allowed Abraaj to move funds around. Now, Abraaj went to their law firm, Freshfields, and said, are we allowed to do what we're doing? Do we have to show bank statements to these investors? What do we have to do under the terms of the agreement? And their lawyers said, absolutely fine. Nothing you're doing breaks these agreements. Their own auditors, KPMG, said exactly the same thing. The competent authority in all this, the Dubai regulator, had Deloitte do an audit. They said the same thing. Yes, there have been movements of funds, but there were no funds missing. So in the normal run of events, there was some discontent and some investors. So the money that had been drawn down, there was a delay in investing it in some hospitals. That money was returned to the investors with interest, but actually was still locked in to be investing subsequently in future projects. And many hospitals and many diagnostic centers had been invested in by the health fund, but because of events in Nigeria and Kenya, there were delays in making those investments. If you then write a newspaper article saying that the Bill Gates Foundation, for example, is asking questions about the way in which this private equity fund is run, that is the most destructive thing you can do to a private equity fund, because it's all based on trust and due diligence, okay? You're handing over a big chunk of you're handing over a proportion of your investment fund to this company to invest on your behalf. Reputation is therefore everything in this. And Naqvi was desperately trying to raise money for his APF6 fund, which was going to be a $6 billion fund for emerging markets. So reputation was even more crucial than normal because they were in a fundraising and investing period. Now, I don't know what happened. Either someone in Abraaj leaked material to the press as a whistleblower, very carefully crafted email was sent to investors saying they should ask questions about the health fund. That was then leaked to the Wall Street Journal and the New York Times, who wrote a piece. That might explain one article, but then we see a series of articles at crucial moments. And it could be that this is still someone leaking this material, or it could be that the web server, the email server of Abraaj was hacked, and a carefully curated set of emails was leaked to the media at selective moments to ensure that the company slowly fell apart. Now, it may be just a coincidence, but it does seem as though each time Naqvi had managed to pull the company back together again, at the end of 2017, the very few investors who wanted the drawdown money returned, had it returned with interest. Everyone else was perfectly happy. The fundraising was continued for the fund. Then in February, a new set of articles comes out. That means that APF6 fundraising is stopped. Naqvi then puts together a restructuring package. New articles emerge which scupper the restructuring package. There's a botched liquidation process. And you can see all the detail in my book, but I cannot say that I have got the WikiLeaks memo, right, that says an economic hitman operation has been ordered. This company is to be stopped because of its sale of Karachi Electric to Shanghai Electric, and because there's a whole bunch of US private equity companies who'd very much like to pick up the funds at fund level cheaply. I don't have that document, but circumstantial evidence seems to me to be overwhelming that this is not what it looks like, that the dominant narrative is not correct, and that there's much more at work here. And here's the thing. So a number of these reports talk about over $700 million missing, right? There are different numbers bandied around at different times. And other reports say that $390 million has been returned. Okay. What no one seems to have discussed is the remuneration package for someone like Arif Naqvi running a company like this. And actually, most founders of private equity companies, the huge American ones, take 80 to 90% of the carried interest of the money that the company makes year on year. Naqvi was entitled to the money that he was paid. All the money that he was paid is documented in his remuneration package and in the minutes of the board. And actually, he took less than most founders of private equity companies. And to my knowledge, there is no civil action anywhere, in any court, or against the liquidators for the recovery of any money. So what has actually been stolen here? If 380 million or 700, if these large amounts of money are supposedly missing, why isn't anyone anywhere trying to recover that money from Arif Naqvi or anyone else to do with Abraaj, or indeed the liquidators? I think it's because there is no money missing. That, in fact, if the restructuring plan, which was co-authored by a globally respected restructuring company called Houlihan Lokey, if that plan in August 2018 had been implemented, then all the creditors of the holding company would have been repaid. And the only investors who had complained had already had their money back with interest. So I think what's happened here is you have that saying where generals like to fight the last war. Well, I think journalists in this instance have been carefully fed, in my view, carefully fed material, and they've seen this as another billion-dollar whale, another big story like the big Malaysian fraud case, the 1MBD scandal, or another Bernie Madoff story, the US investor who had a Ponzi scheme, paying old investors off with new money. I've seen no evidence that it's any of those things. And in the normal run of events, the Dubai regulator who imposed a fine on Abraaj would have dealt with this. They would have challenged the fine. But instead, as I say, for geopolitical reasons, the Department of Justice and the Trump administration got involved, so the company had to be brought down.
Very interesting. So, Professor Brivati, let's talk about your book. And it's caused a lot of ripples in the Pakistani press. You've been featured in almost all of the major news outlets. And a lot of Pakistanis are wondering why is a white British historian so interested in Arif Naqvi, and how was he able to get access to Mr. Naqvi and research this book? So would you like to share the process behind this book and your inspiration?
Sure. So I'm formerly a professor of human rights and life writing, and now most of my work is international training and development. I work in Iraq, in Lebanon, Jordan, in Africa, and I work with civil society organizations, individuals, governments in capacity building. All of that is based on traveling. COVID stopped all of that work, so I was looking for a COVID project, and I began to look at the idea of stasis as a metaphor for our current condition during lockdown, but also its original Greek meaning, stasis, is a civil war within a city. And it struck me that there was a civil war between science and irrationality, between Trump and democracy, and I was playing with this idea of stasis. It turned into a series of essays, which you can still find on my blog if you're interested, about individuals who were in different kinds of stasis. And that's where I came across the Arif Naqvi story. And it struck me as being, it's very, very unusual for someone to be under house arrest in the UK. And he's under house arrest on the extradition treaty with the US, which was a counter-terrorism instrument, which has never really been used for that, but has instead been largely used because of US judicial activism to extradite people from the UK to the US. Hardly anyone goes the other way. There's a woman who is alleged to have knocked down and killed a young British boy. She was spirited away to the United States. She has not been extradited to face charges here. But people, UK citizens and Pakistani and other citizens like Mr. Naqvi over here are regularly extradited back to the United States. And Julian Asraj had huge amounts of coverage about his case. And Mr. Naqvi had no coverage at all. So that's the first thing that interested me. And I wrote a dossier on the human rights dimensions of the case. And then I just kept digging and digging. And I popped into the magistrate's court to see one day at the hearing, and I met one of the Wall Street Journal's articles, one of the Wall Street journalists who've now written a book about the case. And it struck me that he was path dependent, as we say in political science, on Naqvi being guilty. And it reminded me, and I've said this a couple of times, but it reminded me of Truman Capote's famous book In Cold Blood, where Capote writes a book about a mass murder and interviews the guy who's facing possible execution. And then he becomes increasingly impatient that the execution hasn't taken place because he's desperate to publish his book back in New York. And it struck me that this guy needed somehow this story to have a guilty verdict at the end of it for Naqvi to go down. And so I thought, well, there may be something in this. And my publisher was delighted that I'd gone away from a sort of esoteric analysis of stasis to write a book about this case. I met Mr. Naqvi's son that day at the magistrate's court. We had a coffee. He's a very impressive young man. I sent him the outline of what I proposed to write, and Mr. Naqvi said he would give me interviews as long as he didn't talk about the case that he faced. And he also, at the very beginning of this process back in 2008, gave interviews and gave responses to the Wall Street Journal journalists. But nothing he said then subsequently appeared in any of their stories except for a very bland denial. So he stopped talking to them. And I think he talked to me because, I'm a historian. I'm writing a book as a lockdown project. I looked at it, or tried to look at it, as objectively as I could. And when I looked at that US indictment initially, as I say in the introduction to the book, I just saw a thread there that didn't seem to add up. And I just pulled and pulled and pulled. And over a 7-month period, I wrote up my account of the book. So what I hope the book is a objective, factual account, which tries to put both sides and doesn't presume that I'm not a judge and I'm not sitting on a jury. I can't pronounce on the guilt or innocence, and I shouldn't. It's not my job or journalists' job to repeat Department of Justice indictments and reproduce them uncritically. It's our job to engage with both sides of the argument. And if my book has resonated a little bit in Pakistan, then I think it's because there was a one-dimensional discussion going on. And at least now, I hope, there's a more balanced discussion going on and a more interesting debate about the many aspects of this case.
Yes, indeed it is. And with your book, the narrative is changing, and there's another narrative in stores now. So tell us, when will your book be published, and will it also be released in Pakistan?
Yes, so Vanguard Books will be publishing it in Pakistan, I think early next month. The UK edition will be released on the 20th of July, but there'll be a separate Pakistan edition from Vanguard, and it's the UK and US one will be published on the 20th. So we're a little bit behind the Wall Street Journal book, but they had a 3-year start on us. So I think we've caught up reasonably well.
So is there a reason why you're publishing the books almost at the same time?
Well, I mean, look, we could have done a lot more work, I think. There's a huge amount of material out there. But I personally, from a human rights perspective, didn't think it was fair that Mr. Naqvi's legal team has kept him silent, right? They would only let him talk. Well, I don't think they did. They didn't want him to talk to me. And he only talked to me about stuff that didn't affect his case, right? And there needed to be the other side of this debate out there. Otherwise, this man and his co-defendants has been accused, he's been tried, he's been found guilty in the Western media already. Before anything, he's even been extradited to the United States. So just in terms of pure fairness, it seemed to me to be important to get the other side of the argument out there as quickly as possible and to generate the debate. And it's very interesting because the debate is going full swing in Pakistan, but there's only one side of the debate still at the moment in the Western media. We'll see what happens when my book comes out on the 20th of July. But right now, the Murdoch media machine, the Murdoch publishing machine, is talking to itself and telling itself just one side of the story. At some point, I hope other media outlets in the UK and elsewhere present the other side of the story. And then, people will make up their minds, right? They'll look at the evidence, they'll look at the facts, and they'll make up their minds. And one day, Mr. Naqvi will have his day in court and be able to plead his case and his case that he's innocent. But until my book emerged, that case was not being made anywhere. So I'm glad I could help a little bit in that respect with my lockdown project.
Very interesting. And Professor, last question. You've spent some time with Mr. Naqvi. You've spent a lot of time researching on Mr. Naqvi and Abraaj. So in your opinion, how would you describe Mr. Arif Naqvi in one word?
He's a Pakistani patriot. Now, I'd never met him before all this started, and it has taken a toll on him. He is suffering from trauma, from post-traumatic stress disorder. The psychiatrists in the court case were very clear that he's suffering from depression. So his life has been shattered by this. But what I saw was a man of great intelligence and great dignity, a Pakistani patriot who genuinely believed in impact investing, who was not driven by greed or avarice, but actually was driven by making a difference. And very, very quickly, when you see him talk about buying Karachi Electric, he's like a kid, right? He's from Karachi. That deal meant a huge amount to him, and not because of money, but because it was his hometown. And I think in the long run, his plan was to go back to Pakistan to make a difference on the ground in Pakistan. And I don't see this man. The man I met was not a crook or a con man. He was a genuinely committed Pakistani patriot who believed in the power of impact investing.
Very nice, Professor Brian Brivati. Thank you very much for speaking to the Pakistan Daily.
Very lovely to talk to you, and thank you very much for your time.